All right, Harish, but the other sector that you have flagged off is the metal basket. Well, of course, the biggest trigger is the kind of tariff and the trade deals that have been announced that actually lifts up the global sentiment as well. But in the past 1 year, if we see the index, that has done absolutely nothing. But Harish, my question is that when this sector comes on a roll and starts to shine, there's no stopping, because from the past, barring the last 1 year, if I see the previous 4 years return, that's almost a 400% jump. What kind of a return expectation you have within the metal basket, how well it can do, and within that, which are the pockets that are you bullish on?
Right. So from a fundamental standpoint, we are going to see a reasonable amount of reindustrialization back in the developed world, and that is what this entire geopolitical narrative is speaking about. I mean, this entire spending of defense by, say, Germany is going to lead to some kind of reindustrialization of Europe. We are talking about getting some amount of jobs, of course, not the entire amount, but to get back manufacturing back in US. That is also going to require a reasonable amount of hard assets in the developed world. So while there is going to be a balance of trade, etc., we think that there is going to be a greater demand from the developed world, which is going to come through, which is over the course of the last maybe 2, 3, 4 decades has been on a structural decline. So I think that is one key variable. The second key variable is that of the dollar index itself, which has kind of cooled off from its highs, and as many of us know, especially because they are priced in dollar terms, the real value of these commodities typically tend to appreciate in a weakening dollar regime. So that's the second point. But the third and the most striking point for us is that if we were to plot the profit pool share of the metal companies, what do I mean by that? I take the entire metal sector profits, divide by the top 1,000 companies' profit pools, and we plot this for the last 25 years. It might surprise you and your viewers that the metal sector profits are today back at 2001 levels. So that is the level of the profit pool share that has kind of eroded from metals. Again, these are extremely cyclical sectors. Sectoral profits vary from 2% to 17% of profit pools. So you would ideally want to buy these sectors when they are at the lowest end of the profit pool share in a cyclical sector, and which is what we think that there is a potential trade which could last maybe under 2, 3, 4 years if any of these kind of things, the narrative starts coming true.